we haven't seen anything yet. I think before this is all said and done, most of the public will wake up and say, my goodness, what am I doing? Watching all of my dollar-denominated wealth evaporate.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today, our president, Andy Schectman. Andy, thank you so much for joining us today.
Good to be here, Elijah. I hope you're doing well. It's really nice to finally find a Friday here, but always good to recap what's going on in this crazy market with you.
Yeah, I mean, in this crazy market, as we look today, silver down and gold down quite a bit. Gold below, $17.25, silver below $27, around $26.25. What do you make of the recent price decline, and what is it looking like at Miles Franklin as we see prices plummet?
The price decline has more to do with COMEX and the commercial banks wanting desperately to keep from more deliveries coming off of the COMEX in silver in particular. I think they're afraid that you're continuing to see this others reportable group stand for delivery on the COMEX, and they're trying to keep others from following suit by raising margin limits and then dropping the price down and dissuading people from taking delivery. This is part and parcel with what we've seen, continuously, but especially last year as we get close to the COMEX delivery month declaration, which happened yesterday and can continue here through the month of March. But to expect this type of volatility is something that I think we were expecting it. And of course, it's never easy to see a price that gets hit by 3 or 4%, but in the scheme of things, that's really not too much. It just scares you when you see this type of action, counterintuitive to what's happening with demand. Certainly people get rattled by it, but I look at it as a subsidy. I think when things go on sale is exactly the time to be adding to your portfolio. There's an old saying on Wall Street that you buy the dips and sell the rips. Well, I think this is a classic dip. It's a subsidy. Nothing has changed. In fact, our business is absolutely off the charts, as is everyone in this industry, evidenced by most dealers being out of product. The demand, Elijah, is extraordinary, unlike anything I've ever seen. I keep saying that, but this will be Miles Franklin's biggest month ever in 31 years. And I think people are waking up to what's going on with the manipulative price action being just an opportunity to add to your stack at subsidized prices because, quite frankly, nothing's changed. And in fact, arguably is getting worse by the day.
You mentioned the contract standing for delivery. Now, I'm hearing that most of the time when this happens, almost all of them just roll over to the next month. What do you see happening today? I guess, they were standing for delivery yesterday, but what do you see happening going forward here?
Well, I mean, they can continue to stand for delivery. That's just the first delivery date notice. And I think over 30 million ounces have notified that they're standing for delivery. I mean, that's a tremendous amount of silver when you realize that 300 million was taken off plus 300 million plus last year, and done so, in what amounted to a decade's worth of deliveries. Typically, we would see 10% of that stand for delivery per delivery month, and so it's a sea change, really. You are seeing big money, and we have been really since 2017. It's a linear progression that I keep talking about. A common thread being taking possession of metal off of the exchanges, removing counterparty risk. We've seen that going all the way back to 2017 with all the central banks repatriating their gold. And in a linear progression, we now see the sovereign wealth funds and the family offices pulling metal off the exchange through deliveries. This is It's really very unusual. The COMEX market was never designed to be a delivery mechanism. It was designed to be a platform to offset risk and to hedge exposure to market fluctuations. The genie has been let out of the bottle. They opened Pandora's box by these massive deliveries last year, and so you're seeing, especially with the Reddit group, showing just how short naked the 8 commercial banks are on the COMEX market and the vulnerability. Well, the commercial banks are very powerful. They have a lot of money. They're not going to go down easy. They're going to go down swinging. And this market price action, which is counterintuitive to what it should be, based upon the physical demand world over, where we can't even source 1,000-ounce bars for 4 weeks, which is unheard of, is done specifically to, kind of knock all of this demand on its heels. A lot of the new demand hasn't experienced this type of counterintuitive volatility that all of us seasoned gold and silver buyers have. This is old hat. Nothing's changed, and you'll see it bounce right back up. But, I guess my advice to people would be is, again, price is a tool of misdirection. The fundamentals are far greater than the price action. And what looks like such a big drop of gold at $47, yeah, it's a big drop, but in the scheme of things, it's 2.5%. Is that enormous? Well, it's not something you like to see, but the effect is far greater than the actual, or the perception is far greater than the actual reality of it, in that getting gold and silver is really getting challenging, and the demand is off the charts, whether it be at the top of the food chain with industrial-sized 1,000-ounce bars, or down here where gold eagles, gold buffaloes, gold maple leafs, and just about every form of silver is becoming as rare as hen's teeth. So, yeah, Elijah, I think I will say this, and I'm not meaning to be trite. Price is a tool of misdirection, whether it be on the upside in certain asset classes or on the downside in commodities right now. It is misdirecting the public away from what arguably is, I believe, the opportunity of a generation. And I find that mostly in silver. Ultimately, we want to be in gold, I think, ultimately. But right now, the opportunity of silver is better than anything I've seen in my 31-year career. And I think people just can't be knocked off the branch by the price movements. It should only strengthen our grip right now. And remember, this is not a short-term play. This is not about getting wealthy. This is about preservation of capital that offers amazing upside potential. So don't forget, it's not just the upside potential. It's about the preservation of capital and hanging on to something that has been immutably valued for 5,000 years as wealth in the midst of what is a pivotal, seminal event, a changing of the guard, a new system, a reset is upon us. And so hold on tight, grip hard on your silver and gold, use these dips as a chance to increase your exposure at subsidized prices. And, when things go on sale, we're supposed to be happy. We're not supposed to be sad. We're supposed to be happy and realize that, well, it's not even really logically justified. So use it as an opportunity to add to your exposure. I say that with 100% objectivity, not talking my book. I mean it. And I think, I think people would be wise to take a step back and listen to what I'm saying and look at that as reality, because we've seen this over and over and over again. And the fundamentals are growing stronger by the day, as is the interest by the largest and most sophisticated investors on the planet.
And yeah, that's so interesting, everything that you're saying. And definitely here at Miles Franklin, we want to cover all the perspectives, for example, on precious metal manipulation. So people can look in the description and on the screen for like that playlist we have for all the perspectives on that. But I think one of the things that you're mentioning that really intrigues me is just how we're seeing so much demand right now. And you mentioned on our Mugs and Metals podcast a couple weeks back that absolutely no one was selling. So, and we see the price then fall today, and it's like, this just doesn't make sense. So yeah, like your perspective on that, is anybody selling right now?
Nobody. I mean, and I say that to you with 100% honesty, Elijah. Nobody is selling. The price has nothing to do with physical demand and or selling. It's the antithesis of it. People are panicking and running into precious metals as a island of safety in a world of decreasing privacy and massive increasing uncertainty. You know, we are going to move to a digital platform. It's just a matter of time. And whether it be special drawing rights by the IMF or a new digital Fed coin, you're going to see it. And I think that with that comes no escape from the matrix, really. And precious metals gives you that privacy, gives you that liquidity, and it more than anything allows you to do what the biggest money in the world has been doing by front-running these decisions since 2017. And so I think they misdirect all of us by price, but if you look at what they've been doing quietly, they being the most sophisticated, well-informed, and well-funded traders on the planet, they have been accumulating metal quietly and removing counterparty risk for the better part of 4 years. And that is not changing when you see 30 million ounces stand for delivery. And I don't remember the number of tons of gold. Over 100 metric tons of gold stood for delivery last month on gold. So you're seeing tremendous amounts of gold and silver leave the COMEX by this others reportable group, which is largely sovereign wealth funds and family offices, the most wealthy and in the know and influential private investors on the planet. Do they know the people pulling the strings above? I don't know, maybe. But I will tell you that it's highly unusual to see it. I mean, highly unusual. And I've said on most of the interviews I've done over the last year that to me was, through everything, the biggest development in 2020, the biggest change in anything I've ever seen, is the amount of deliveries coming off of COMEX by this new reportable group, which is identified as the most wealthy and in the know private investors on the planet, the sovereign wealth funds and the family offices. So, things are changing, Elijah, and I think you have to be able to delineate price and logic. And I know that's hard to do, even for me, when I'm sitting here saying this and understand it. Yeah, everyone gets elated when the price goes up and depressed when the price goes down. But, that's part of the game, and that's why they're doing what they're doing. Use those opportunities to add even a few ounces to your portfolio when the price gets hit. I've been accumulating every 2 weeks for 31 years. I've never missed a 2-week period. You know what? I don't remember what I paid for most of everything I own. That sounds trite. I'm not trying to be. But in the end, as Richard Russell, my mentor, used to say, in the end, it's about the number of ounces that you own, not the price that you paid for it. And I know that can make people mad and say, well, easy for you to say price is important. Well, it is important, but not in the end. In the end, it's how many ounces do you own? And I think if you are able to increase those ounces at subsidized prices, it serves you well. It has me.
One last question before we let you go. People are talking about how, and you talked about this as well, how premiums right now have just skyrocketed. They're well above the spot price. And we've seen this in the past, for example, back in 2008, 2009, when the silver price plummeted. We saw, Silver Eagles around $20 when the spot price was like $9 or something like crazy like that. But then it eventually corrected. My question to you is, do you think this is a situation like we saw back then where things will normalize again? Or is this a whole nother thing where this might just be kind of the new normal?
Well, I talk about this ratio a lot. Another person who in some ways is somewhat of a mentor to me, although I've never told him that, but I admire him so greatly, and I've had the pleasure of working with Rick Rule and his firm for the better part of 15 years, both personally and professionally, and we have a great relationship, is what he talks about in terms of exposure to precious metals across the entire financial matrix. If we go back to 1980, we last saw the Dow Jones cross with gold at 850, a 1-to-1 relationship. Back then, people didn't want equities. They just wanted gold coins and silver dollars. And that was an 8% allocation to people's portfolio in 1980, precious metals. If we go 40 years forward to 2020, right before COVID started, and life was still hustle and bustle and everything was good, we weren't concerned about COVID issues the way that things have changed so precipitously since. The allocation to metals in the global financial, or in the U.S. financial matrix rather, was 0.5%. So it had regressed from 8% in 1980 over the 40-year period to 0.5%. And that's not just, you and I, everyone, private investors. That's also would be things such as hedge funds and endowments and everything. The whole financial picture had an exposure to metals of 0.5%. And the mean, the average over that 40-year period is 2.5%. A regression to that mean would be a 5-fold increase in demand in this industry. And I would argue wholeheartedly, because I see the expansion into the mainstream with hundreds and thousands of new clients over the last year. And we had more new clients than we typically would see in 5 years last year. And the trend is continuing here. Financial advisory is calling us, and the large private investors who heard about us through their friends or their family. The exposure is regressing to the mean. Now, I don't know if we've regressed to that 2.5% yet, but I would say even a 1% or 1.5% increase, or 1.5% allocation being a 3-fold increase at a period of time when this industry can't handle it. Really never has been able to handle it, as I've often joked about the industry being, or the mints in particular, being the model of inefficiency, the U.S. Mint, which more or less has ran out of gold eagles and buffaloes since the second week in January. We're on allocation. They're ridiculously hard to get. And the Canadian maple leaf gold being 4+ weeks, if not longer, back ordered in the second week in January into February. This is unheard of, where I can't get gold coins in January and February without massive difficulty and huge premiums, or 1,000-ounce bars being 4 weeks out. These things are unheard of. So when you talk about an expansion into the mainstream, when you talk about a regression of premiums back to what is normal, well, I don't know. These things are meeting each other head on, and we have way more demand and an expansion of interest at a period of time when, the physical precious metals market is really not, I think, prepared to handle that. So at some point, I suppose those premiums regress, or do they? Look, Elijah, we have the same problem as the investor does. When I go out, I've been one of the only companies in America to have product, really, for the past year. Throughout the whole 2020 and where we are now, a common theme in this industry has been companies out of product. We have done an amazing job of getting it. But the only way we are able to do that is to pay more than everybody else and pay earlier than everybody else. So I have to, months in advance, buy this stuff from the Austrian Mint and the UK Mint and the Perth Mint and the South African Mint and the Canadian Mint, and pay higher premiums, go out on my line of credit, pay in advance, and those premiums are as high as I've ever paid for them, ever, from these distributors, ever. And so now I am in the same boat. I have to go 3 months out, pay the money up front, and hope that I'm not making a mistake. Like you say, do premiums normalize? If so, I'm underwater on everything that I just bought from those mints. So this is a dilemma that we all have to deal with and ask yourselves, is is the premium going to increase or decrease? Will it go back to normal, or is this just the beginning? And by my book, I'd rather have the product, because I believe that we haven't seen anything yet. I think before this is all said and done, most of the public will wake up and say, my goodness, what am I doing? Watching all of my dollar-denominated wealth evaporate. And through inflation and money creation and the fact that price discovery is so difficult right now in just about every asset class because of distortions with interest rates and manipulation with markets, I would argue having a core position in precious metals, the base of your financial pyramid, has never been more important. And I really see that in the awakening of massive demand through financial advisories contacting us for physical metal. That is really unusual. And we're getting that every day. Not just myself, my brokers are too, and talking to advisors who want to open up a line of communication and a funnel clients to us who they believe it's important to have an allocation to it. Now, here again, remember, just a 1% allocation or a 1.5% allocation would be a threefold increase to demand in this industry, and recency bias would dictate we're not ready for that. So, I don't know. I don't think premiums snap down anytime soon. Quite frankly, I am kind of somewhat convinced that this is just the very beginning, and they're only going to go higher from here, at least for a while.
All right. Well, Andy Schectman, thank you so much for your time today. If people would like to contact us, they can call us at 1-800-822-8080 or email us at info@milesfranklin.com. Any last thoughts before we let you go?
Yeah, again, don't be so affected by the price. I know, again, I'm not trying to sound trite or disingenuous. I just think that the fundamentals are far more important. The big money knows that if they want to misdirect the public, it's done so through price manipulation or through hitting the price when it counterintuitively wreaks havoc with our psyche. Don't be affected by that. The bull run in the metals market is just beginning. It is nowhere near its end. And we do have some specials right now that I ran with your father the other day on Liberty and Finance, and that is 2021 silver Krugerrands at $5.29 over. It's interesting that it's hard for me almost to say that, as that would be higher premium than I've ever sold them for in 30 years, by and large. But I think if you look around, you'll see that's the best price in America. And we are eager to continue to help all of our listeners. And, while supplies last, this is, in my opinion, the best buy out there right now, and they're in stock. So one last thing I'd like to make mention for all of you listening out there. A 10 to 14 day delay right now on stuff that's in stock is not unusual. And that is because our shipping department, as is every shipping department in the industry, whether it be the largest wholesalers in the world or all the online retailers, they're overwhelmed, working around the clock, 6 days a week, packaging things up, trying to get it out. So please have patience, and we will deliver, as will all the companies out there who people have bought from. This is not people playing with your money. This is record demand that has shattered anything this industry has ever seen. And the logistics behind it, coupled with blizzards out east and icy roads down south, which have really disrupted the supply chain, stuff coming in from the primary distributors that get imported from Europe, has slowed things up considerably. So we will deliver, as will all the companies out there. Have a little bit of patience and use these drawdowns in price to add a little bit of product to your portfolio at subsidized prices. I do appreciate you getting the word out, Elijah, and our weekly conversations, and I look so forward to doing it again with you next week. And if there's ever anything that we need to address in the middle of a week, let's not be afraid to jump on and talk about that too briefly.
Definitely. Sounds good. Andy, once again, thank you so much for your time, and God bless.
God bless, Elijah. Stay well, my friend.
physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.